What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, we are back with crazy bets in the stock market, courtesy of Wall Street Bets. We are on to week 10, which is absolutely crazy. So if you're excited for today's video, make sure, as always, to like the video, subscribe to the channel, and turn on those notifications for all future uploads. We're going to get right into the new trades that were covered on Wall Street Bets this week. The first one, this person has essentially put in 18,000 shares worth about $30,000 into Plug Power, and he has made a lot of money so far. At the time of recording this, Plug Power was about $3.84. It had some new announcements with some new batteries that's going to be hopefully used to help expand their market in Europe. And as a result, it has took off like a rocket. It was up 34% yesterday. It was up 20-something percent like 2 days before that. And this person made a lot of money. It's absolutely awesome, you know. He's up over 130%, which is absolutely insane. We don't see the portfolio diversity, so hopefully this wasn't an all-in YOLO. But shout out to him. Obviously, here's what I would do from here. I would either sell covered calls to kind of offset, the risk management, or just take some shares off the table and take some profits as you go. But obviously, because again, these stocks aren't going to run up 30% every single time, every single day. Maybe they do, maybe they don't. You obviously don't know, but it wouldn't hurt to even take a couple $1,000s out. Take some profits. It would not hurt. But shout out to you, my friend. Hopefully, you are managing this position well. A very good start to Wall Street Bets. This next one was another unbelievable one as well, which I couldn't even believe it. He full ported into his Robinhood account into stock Iron sub $9. And Iron has been a hot stock as of recently. It has been a hot stock because they've gotten into using NVIDIA software chips and stuff like that and wanted to expand, and Bitcoin and all these different kind of things here. It's an energy company, but it's done a lot of expansion as a result of it. And this person is up over 900% because he got in at $9 or sub $9 for this company here. Sorry, I'm battling a little sickness here. So he got in at sub $9, and at the time of recording this video, I can tell you IRN is definitely up around, I think it was like $40 last time I checked. Could be wrong. Let me double check here really quick. Oh, nope, $50. I'll bet $50 a share here. So he basically 5x his money in that case. But he might have had some other positions as well here, but he has made some absolute killer returns as a result. And again, with these kind of stocks, doesn't hurt. Take money off the table, profit, put it into S&P 500, put it into bonds. Markets are all-time highs right now. Is it going to stay that way for much longer? Who really knows? This is a very uncharted water, I think, for all of us, myself included. For someone who has done a lot of research on the market and stuff like that, this is some uncharted territory with the government shutdown, with rate cuts. Markets are all-time highs. Gold's at all-time highs. It's absolutely crazy here. So shout out to you, my friend, on that one. Again, making some good money here. Next person. Now, this one right here is one of those learning experiences that we talk about. Zero DTE Spy Baby made $1,500, then lost $4,000. And as we know, Spy, 0 days to expiration, zero DTE is basically gambling and hoping for the best. So this person made $1,500 on SPY, 0 DTEs on October 1st. Then he lost $4,000 on October 2nd. These 0 DTE guys are killer because, again, the stock moves one small thing against you and you are out thousands of dollars just like this person was right here. So, again, another learning moment for everybody here. 0 DTEs can be great. Can give you a high, can give you that momentum. Oh my God, making money. This is awesome. And then put you back down to reality of I just lost $4,000. Crazy times. Be careful with trading 0 DTEs. Cannot say that enough. I think it's like every single week now at this point. This one was also a crazy one to me personally. $63,500 YOLO Amazon 2X leverage. Basically, what he's buying is he's buying an ETF that focuses on leveraging Amazon 2X. So if Amazon goes up 1%, the leverage one goes up 2%, so on and so forth. But also, keep in mind, if Amazon goes down 1%, the leverage goes down 2%. and you got to make all that money back. And when you have a loss in your account, it takes more to get back to where you started. That's how it works in the stock market. And this person put 100% of his portfolio into that. Now, Amazon has come down a little bit recently, as we know here. They do have earnings coming up. I'm not really quite sure when. Some of this is like an earnings play to hedge into, potentially. I'm not really quite sure. But since you've got 2,000 shares, maybe not a bad idea to hedge it with some covered calls, maybe. But 2x leverage ETFs in general, there's a lot of them out there. You're going to see people make hand over fist money on that. You got to be careful of it. Because, again, if Amazon has earnings, they're down 5%. He just lost 10%. He's down $6,000 in a matter of minutes, right? So leveraged ETFs are very risky, especially when we're at all-time highs. In my opinion, I feel like leveraged ETFs would be more beneficial when we have a huge pullback and we start to have a huge recovery. But getting in at all-time highs could be risky. So hopefully it makes some money here. He's up $42, which is awesome, but hopefully it stays that way as we get into more and more. But again, be mindful of leveraged ETFs. This person made $124,000 on Duolingo using call debit spreads. Basically an advanced options trading strategy here. He made over $100,000 or about $100,000 here. He said 124 because he had more on the other pages here. But again, making over 100K on this is absolutely awesome. And basically, called debit spreads are basically him betting that Duolingo is going to go up over $300. Now, the education behind a call debit spread here is that just buying call options costs a lot of money. So when you do a call debit spread, it's buying a call at a strike price and then selling a call at a higher strike price. Now, the selling of a call at a higher strike price helps to offset your cost basis. So instead of buying a Duolingo $300 call option that costs a lot of money, instead what he can do is he can buy the $300 and then sell the $315, and it's going to offset his cost basis. Now, spreads are a very advanced options trading strategy here. It needs level 3 on Robinhood. So keep that in mind. And you do need margin to do spreads, okay? Because in theory, if Duolingo goes over 315, then he has to have the shares to give on the sold call side of a 315 strike price. So keep that in mind that, spreads are risky. They're advanced trading strategies here, but they can be very useful because they can help offset your cost basis so you can get into a position still and not pay all the money up front. So shout out to you, my friend, making over 100K on Duolingo. Absolutely amazing. Duolingo is one of those slept on stocks here. I remember when it went public, it was like one something, I think, or maybe it was $200 a share. And now I think it's like $350, I want to say. Let me see if I can take a look at the chart here really quick for everybody here. So Duolingo, 322. At one point, it was at 545, which is crazy, actually, to think about. So at one point, it's at 545, and I think it went public around like $100 maybe or something like that. I don't even remember, honestly. But, Duolingo, still on stock, to be honest. I also have it. I use it every single day. But, shout out to this person right here. I made some good money here. Now, this person said solid we were posting Robinhood gains here. This person, even though it's not a lot of money that he made only 10 grand. Which is still a lot of money in my opinion. He's up over 1,700% on Robinhood shares because Robinhood's at $145. Robinhood has pumped up even higher. Not only are they in the S&P 500 now, which made them go even higher, but they also had some reports come out about how much money they're bringing in with the prediction market, and that sent DraftKings down in sports betting, and it sent Robinhood going up even higher. This person got in at $8 a share about, and it's at $145. Crazy percent gains. Again, if you do your due diligence on a stock and you're convicted on it, you buy into it, these would be some of your potential results. Just like NVIDIA, just like Apple over the years, Google, all those different ideas that came out over the years, all those different stocks. Very, very good. Amazing percent return. 1,700% is crazy. This person said some people had the best day of their lives and some people the worst. Now, what you are seeing here is some crazy strategy here. And I don't know when he opened these up. But what is going on here? He basically sold 20 cash secured puts here. which is at $39 strike prices, which is where the cash collateral of $78,000 comes from. And so basically saying like, hey, I don't want ASTS to go up or to go below $39. And it's lost a lot of value, which is great. But then he also laddered, it looks like, or pushed out and said, hey, I don't want ASTS to go above $40 for call sides. And these are all deep in the money because it's at $65 a share. He said, hey, don't go past 45. Hey, don't go past 43. Hey, don't go past 40. A lot of money put into this. And it's at $65 a share. Not really quite sure what the strategy is here, but that's why he's down $94,000. So I don't really quite know. I don't know what ASTS did. Let me take a look at the chart here and see what happened here. It was up 2% here on the daily. Oh, it rocketed up ever since like the beginning of September. It's been on a rocket ship, but now it's up at $68 a share. So this dude is sitting down a lot. And the reason why is because, again, if he doesn't have the 5,100 shares, again, that's a potential, profit he's losing out on here. So, yeah, he made a lot of money on the put side. It's good for you, my friend. But now what do you do when you're down this, right? So it's very interesting that he laddered it out, but he laddered it with lower strike prices. Usually it would have been like 45, then go like 48, and go ladder it out a little bit higher, so that gives you a little bit more, upside protection. But he doubled down, and now he's sitting down a lot of money here. So again, selling options, very, very risky strategies, obviously, as we know. And again, with companies that could have these big catalysts, these big plays here, you never know what it's going to do. Okay, all it takes is one major news event to come out, and boom, it's up 10, 20, 30%, and people are losing a lot of money. So also things to keep in mind about, as everybody makes money, there's somebody that's going to lose money on the other side of these trades. It's always the case. Someone's got to win. Someone's got to lose. Always the case. This person said triple down on Intel. He's got over $1 million. Here he put in 1.1 million into Intel. Then he put in, it looks like, I don't know if he just bought these recently or not. Oh, relatively recently. Then he put in $730,000 into Intel call options for January of 2026 at a strike of $45. What is Intel at right now? Let's take a look and see here what Intel is. Intel is sitting currently at $37. Okay. Interesting. That's a lot of money into Intel, and it's had a crazy run up with a lot of people buying into it, institutions buying into it. The Trump administration talking about having that 10% stake in it. Crazy lot of money that's going to be here right now. But the thing that's different about this, instead of just using this money to buy more shares, which maybe I would have done more, he's buying options that are going to expire in about 3 months. So Intel has to go from $38 to $45 in a matter of 3 months. Can it continue this pump? I don't know, but hopefully he can manage as well, because that is crazy, okay? This isn't like a hedge. This is, hey, I'm bullish on the company. Oh, I'm really bullish on the company now. And that could be good, but also has some risk. So I don't know if he's got any kind of hedge built in here or not. I have no idea, but hopefully he makes money as we go. This person made 1,900%, took 50 grand into 1 million on MU call options. MU 130, I think it was at like 160 or 170 or maybe something like that. So this dude made 50 grand into a millionaire. Woo! That's crazy to me. That is absolutely wild. I don't think they'll say. Shout out to you. 50 grand to a million, you cannot make that up. Absolutely unreal. Everything is a loss. Gah, whatever that means. It's probably makes something right. I have no idea. But look at this, guy. And this is one of those things where this person posted this multiple times, believe it or not, on Reddit throughout the same week here. I don't know why, but he did. Or she did. Obviously, I have no idea who this person is. It's all anonymous. But when you're taking losses like this on options trading here, this might be a time to sit back, reflect, maybe to start buying into companies and positions and shares of companies instead. If you were bullish on Dutch Bros, instead of buying 22 call options on it, just buy some shares. If you're bullish on DraftKings, buy some shares, right? If these are the companies that you're bullish on, buy some shares, sell some covered calls, or sell some cash secured puts. Because cash secured puts will still allow you to get in at cheaper prices, and you also still get some money on the options, as you know. But if you're hitting losses after losses here, this is a chance to reflect instead of trying to revenge trade. Because revenge trading is obviously going to be a huge problem, right? So like taking a look here, and maybe I'm wrong here, I don't really quite know, but he had this one expiring on October 3rd. He then went in on the 10th. He then did it for the 10th, and for the 17th. So it's almost like, oh, this is losing down. I'm going to double down. I'm going to and he kept going and going and going and going and going, right? So I don't really quite know, but it's something to be very, very mindful of when you're trading stocks. Do not revenge trade. That's kind of what this tells me with DraftKings and with Bros, Dutch Bros. Fly, not as much, but Reddit was in here as well. But again, if you're seeing these losses, take a step back. Go a day without trading or a week and reflect, research, reflect on what you did, why it didn't work out. Maybe it's the strike you bought. Maybe it's the expiration date. All those things can help you be better traders. This person said QS, which is QuantumScape. This one's been in the news a lot recently on WallStreetBets, at least. From $35,000 in a loss to $100K plus profit, I won't say I was not nervous. Okay. First of all, this is a YOLO play. Bought it on the 29th, expired on the 3rd. Literally a weak option here. And the picture to the right was him being down about $35,000 to now being, close to 100%, to now being at $100,000. Here's the problem with that. I won't say I was not nervous. So you were nervous with this trade. If you are getting into a trade and you're trading stocks or trading options, if you are nervous about your position, you have too much money in the position. You just do. Okay. I have like 10 trades open right now on my Robinhood account, and I'll get home and it'll be like 4 or 5. And I'm not like panicking, like, oh my God, what happened? Oh my God. I'm like, okay, let me take a look at my market. Let me take a look at the market. What happened? Okay. Now let me reevaluate and stuff like that, because each of those trades is a small position, right? I'm not nervous and checking it every day, every second, every hour, every minute, right? You're looking at these trades here. If you are panicking and you are nervous and you are freaking out, you are way overvalued, or not way overvalued. You are way too much invested into that trade. Your position size is way too big. You should let it play out, reflect on it, once in a while. But if you are nervous about a trade, you have way too much money in it, in my opinion. Okay. So that's something to keep in mind about. But, hey, am I happy he made $75K? Of course I am. That's amazing. That's life-changing money for a lot of people. I'm excited for him that he made $75K. But again, take the money, be mindful, keep your position sizes small. That's just my 2 cents. Next one here, Snapchat. This person put in $1.5 million or about 1.6 million into Snapchat with $200,000 a share, or 200,000 shares at $8.145 as an average cost basis. Not bad. Again, owning shares, great. Sell covered calls, do whatever it is you want to do for it. Hold it for long term, set it and forget it. Snapchat's one of those ones where it comes back down to $7 and it rallies back up to like around $10 a share. This thing goes up to $10 a share. You're looking at over $2 million in your portfolio, and you put in 1.6, about a $400,000 gain potential there, right? So Snapchat is one of those companies, again, it's social media, and people are still using it. It's not like it's a dying out social media app, okay? People are using it all over the world, right? And they're trying to become profitable and stuff like that. Remember, Snapchat was trading at like $60 a share at one point. So, if they can turn their business model back around, make some good money as a company, this could be a good trade long term. But again, at least he bought shares and he didn't YOLO options. So I hope it makes money for you, my friend. Again, if you're worried about the losses, I doubt you are. But if you are, sell some cover calls on it, make some good money in the long term. You'll do great. This person posted this, I think, like 3 times, the same username in this week alone. Up 25K today on 0 DTE options. Woo! 0 DTEs are back. Up 40K in the month. Now up 11K all time. My portfolio is back. That's a lot to digest. Up 25K today, which is a huge risk, right? Like, he's looking at it. There's a lot of money probably in that trade then. Up 40K on the month, but only up 11K all time. So at some point, he was down like $20-something thousand in that portfolio. At some point, he was down 20,000 because he was down 20. He's up 40. Now he's up 11. This is the risk of 0 DTE trading. And to me personally, I don't know how much longer this portfolio is going to last if this is how his trading is going to go. And that's just my 2 cents. Obviously, I'm not an expert in trading, stuff like that, but 0 DTE is where a lot of people make their money from people who are YOLOing all their money into positions. And it's very, 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 very risky. Okay. Something to keep in mind about when we're looking at these here. I can only imagine it's just up, down, up, down, up, down. And again, you have to be glued to your screen if you were doing 0 DTE options, I feel like. But, hey, shout out to you making 25K in a day. That's absolutely awesome. But again, going from up 40K on the month to being up 11,000 all time means that you started off down $29,000. So, keep that in mind as you're keeping your trades here. I would say take the money, take a little bit of a step back here. Don't just keep YOLOing in because that's going to probably burn you in the long term. But that's just my 2 cents. This one is crazy. And I honestly don't know how much I want to believe it, but I'm going to believe it at what it's worth. Starts off with, I don't know what I'm doing. Great start. I saw someone post about this stock. So yeah, I'm in. And the company, Loan Depot. The meme stock that's supposed to have some money movement like Open Door because of our interest rates and everything else. And not only is this what happened, he also YOLO'd literally an entire amount of $100,000. Actually, like $108,000. Well, I don't know what I'm doing. But someone put about this, so I'm going to put $100K into the stock. Okay. At least put $100K into like Nvidia or Google or Robinhood even or something. Nope, Loan Depot. A penny stock. Oh my, yep. Okay, moving on. Don't even know how to do that one. This one was even funnier to me. My financial advisor told me to diversify. Yes, it is good to diversify your portfolio. But you know what his definition of diversifying is? Cash, Donald Trump stock. Cash, Trump stock. That's it. That's it. And not only that, he also is on margin. Because look at his percentages. He's on margin right now. Which I'm guessing is what this is. Down $88,000. This is probably his margin he took out. And he's also down on Trump stock. Oh my God. And like, here's the thing, right? Like, if he was sitting cash like 70% cash than like 30% or 40%, if he had more cash than Donald Trump stock at this time, sure. Because right now markets are at all-time highs. If you were to diversify smartly on this Roth IRA, which is a retirement account, believe it or not. It's not a fund money account. This is a Roth IRA account. And he's like, yeah, I want to have more money in Donald Trump stock than cash in my portfolio. Oh, good Lord. Be diversified, guys. Yep, that's exactly what your financial advisor said. Hey, cash, Donald Trump stock, baby. This last one I need to wrap up here. Lost it all shorting QMMM. Not the QQQs, QMMM. Now, we know what's crazy about this company. So shorting a stock is risky because basically how shorting a stock works is that you are borrowing shares from somebody and then you're going to hope the stock goes down to then sell them to somebody else and you profit the difference. I made a whole video about it. You can find it. Look up Fridge Financials, how to short a stock. You can find that there on my YouTube channel. But He's not only down $28,000 and lost all of his money shorting a stock here. Do you know what's the craziest thing about this stock here that I looked into? It has been halted and suspended since September 26th. We're on October 4th. It has been suspended for over a week because of potential stock manipulation. Oh, okay. I've never seen a stock halted for longer than like a couple hours, maybe a day. This thing's been halted since the 26th of September. Didn't know that was a thing. And when you short these kind of stocks that can squeeze, that's where you lose a lot of your money. It's what happened with GameStop back in 2021, AMC, same thing. Because again, you're hoping that the stock is going lower. When you're short a stock, you want the stock price to go back down lower so you can give your shares to somebody for a cheaper price and you profit the difference. But here's the thing. That stock goes up 5, 10, 20, 100%. You got to either double down your short just to try to hopefully offset your cost basis, or you have to give back the shares to people at a huge loss. And you get margin called and all that jazz. Crazy times here. But thank you guys so much for watching. This is a crazy week, honestly, in Wall Street Bets. We have people who is just throwing money at stocks because they want to. We've got people who are zero DTE options trading. There's just a whole lot of things going on here. So thank you guys so much for watching today's video. If you made this far in the video, as always, make sure you like the video, subscribe to the channel, turn on the bell notifications, tell your friends, tell your family, tell whoever it is you want to about Fridge Financials and what we offer for financial education, as always. I hope we make a move in the market in some way, shape, or form. And as always, I will catch you guys in the next video.